This trade alone made me 6% last week, and in this video I'm going to show you exactly how you can replicate that by going through my entire thought process with an in-depth analysis, starting with the basics of my supply and demand strategy, and eventually showing you the small key details that I'm always looking at so that I can increase my win rate and risk to reward. Starting with a very beginner analysis here, in order for us to spot a valid demand zone, all we need to see is a bearish candle followed by a large bullish move, in which we will mark out the bearish candle just before this. There was clearly something at this area that made price go so bullish before, so investors will definitely be looking at this as a key area when they're waiting to get their better price. Because as we know, investors will always wait for their better price because 20 pips to them is going to be worth millions, if not potentially billions. But we're not going to stop there because we want to see a level of liquidity in front of our zone. So all we're going to wait for is a small retracement that doesn't quite tap our zone. So as you can see, we formed a swing low and now we're going to break the high to the left. We know liquidity sits below these types of swings, so when we come back to this original zone, not only have we reached a great price at a great area for investors to want to enter at, but we've also taken a key level of liquidity before reaching the zone. These are literally all the strongest market movers that retail traders know of, so combining it all into one strategy is obviously going to have a crazy win rate. If your mentor can't give you a good reason as to why your strategy works, chances are it's some overcomplicated bullshit and it is nowhere near as effective as it could be. But as you can see, we came down to the zone and even immediately got a great reaction. But what else am I looking for? Well, if we're looking at a more moderate analysis, obviously that was very beginner. This is just the setup itself. We have our valid demand zone now. This is very A+ in itself. This is exactly what we want to look for. But let's look at where we are in the markets now, because most people would not be taking a demand at this area. Because I mean, if we look at recent price action, what are we doing? We're creating lower lows and we're creating lower highs. We're moving from the top left of my screen to the bottom right of my screen. That's basically the definition of a bearish trend. You can see we did break the occasional high, but we immediately went straight back bearish and just continued the trend. Not only that, but we even reacted very nicely from one of our supply zones. You can see we had our bullish candle before a bearish move, had our level of liquidity here, came up, reacted from the zone, and you actually could have caught a really nice risk to reward off this trade because these zones are really just moving the market at this point. But it is still extremely important that you are trading with the trend. So why would I take a trade like this? Well, something really important to note is the fact that we did not take out this low when we came down from the supply zone. In fact, we have not taken out this low in a while. You can see we are creating very bullish price action from this point, and we are just doing the same thing over and over again. We're coming up, reaching the bottom of this area, coming up, breaking the high, reaching the bottom of this area, coming up, and we've reached the bottom of this area. So that's immediately a great compliment for us to see. Just doing the same thing over and over again. That's all trading is. That's all technical analysis is. We're just looking for things that have previously happened to happen again. The one thing that's not going for us on this trade so far is that we did not break this high right here. If we broke this high, this would be pretty much A+, but we failed, so I'd say maybe an A setup. If you don't know too much about how we grade setups, there is plenty of information on the Discord, but that's not important right now because I want to show the higher time frames. If we go on the 4 hour right here, we are overall very bullish. We've been moving bullish for quite a while now. And what are we doing? Pretty much the same thing. We're coming up, we're reaching a low area of structure, coming up, reaching the low area of structure, and pretty much doing that over and over again. You can see we're just coming up, reaching the lower area of structure and reacting again. So when we come up, forming all these lows up here, and then coming down, we reach the low area of this. And if we zoom in a bit, you can see we actually have a liquidity demand zone. I'm going to delete all these drawings because it's getting very messy, but literally right here we have a liquidity demand zone. Here's liquidity, here's the demand, and we did close inside, but we did get an immediate rejection after. And we know that on the lower time frames we have started creating very bullish market structure. Not only that, but if we stay on the 4 hour real quick, we draw out the low of this area. We have just reacted so strongly from this area before. Not long ago at all. I mean, looking at the daily time frame, you can see we are constantly rejecting this exact area. This is clearly a price that investors are trying to buy at. So looking for any buy opportunities on the lower time frames is going to be great for us. We had 1, 2, 3, 4, 5, 6, I don't even know, all just failures to break this level. We eventually did break it, of course, but we've come back to it and seen that exact same type of rejection again. So when we move back down to the 30 minute, we now know for a fact that buy opportunities are definitely not off the table. Even though most people seeing this market would definitely see a downtrend, and honestly, I can't blame you, that's completely fair. But when you look at the full picture, there's a lot of things that do go into it, and that does not mean you should be overanalyzing, because there's a big difference between overanalyzing and just looking at the bigger picture, I guess. I'm not necessarily thinking about all of these things as I'm going into it. I'm not always looking at key levels, I'm not always looking at all these things, because a lot of the time it may sway my decision from taking a good trade, or it might give me confluence to take a bad trade. Obviously, I'm at the point where it doesn't matter too much. But I'm kind of seeing these things naturally, and I've just seen the same things happen over and over again in the markets by this point, which is pretty much where you want to be with trading. If you see the same things happen over and over again, you know it's just going to keep happening, because yeah, that's what technical patterns are. So I've got enough confluence to enter this trade by now, and I know that we have potential to take this for a massive risk to reward. You can see how much structure we have to fill in. We know price isn't just going to move in a straight line forever. We're going to correct these moves. Just like this over here, you can see we moved straight up. A lot of people might get excited, oh, we're bullish. No, we're obviously going to correct that move, which is kind of why this bearish trend started, because we had a large move to correct. And we know we're bullish on the higher time frames, so we're going to come in and fill all this shit in. So how would I take my entry on this trade? Well, if you know the strategy at all, usually we're going to enter on the first bullish close for a demand example. On a supply example, it would be the opposite. We'd wait for the first bearish close. If you don't know, it's not allowed to close inside the zone. I feel like I'm saying the word close a lot here, but it has to react immediately, giving a wick rejection, and then we'd enter on the close. However, more source incoming. This is a new 4-hour candle that is about to be created. You can see this candle opened at 1:30. It's obviously going to close at 2 because we're on the 30-minute charts. And what I know happens at 2 o'clock is a new 4-hour candle opens. 2 o'clock UK time this is. So why does that mean I'm not going to immediately enter on this candle? Well, one thing we talk about a lot in the VIP Discord is basically every candle is going to create a top and bottom wick during its formation. Or at least it's going to create a wick in one direction before then moving in its intended direction. Yeah, you can see like pretty much every candle has a top and bottom wick. The only ones that don't are usually during Asia or just after swaps. This one is at swaps. This one is at swaps. This one's during very early Asia session. It's very rare that we don't create a bottom wick before then moving up. But if we do, it's usually because of something like that. But during my trading times, I know for a fact we're likely going to create a bottom wick before we move up. So I'm just going to wait a moment. I'm not going to enter immediately on this 30-minute close because I know price is going to make a bottom wick. So what that bottom wick can do is either stop you out and then go in your direction, or it can make a bottom wick for you to get a better entry at. So sometimes I'll wait for it to make that bottom wick and then flip, so I'm getting the same entry anyway. It's just more safe. And sometimes I'll just enter on the bottom wick. And during this example, I made a great decision and I got in pretty much right at the bottom of this bottom wick right here. We leave 1 pip stop loss room, so it was about 8 pips stop loss. I don't know, it's bold to say that I entered on the fucking best possible spot, but this was all sent to the Discord as it happened. You can see 201, this was just after the bottom wick got created and immediately came down. This setup was so nice, I just wanted to enter with a better entry rather than waiting for the flip because I was very confident in this one. And if we scroll down a little bit, you can see where I was targeting. I was just aiming for a 1 to 6 on this trade, which is where I made my 6%. I did also mention the potential for a 1 to 10, but this was just such an easy target at this high area right here. This is what I went for. And all it took was 4 candles to hit our TP. 4 candles for 6% is not bad at all. And as you can see by the reactions, absolutely everybody managed to take this because this is just such a textbook setup for us. And if you wait for these textbook setups to appear, your win rate and your risk reward will be absolutely absurd. And I just want to show you something. Let's say you weren't happy with that 1 to 6, maybe even weren't happy with a 1 to 10. Yeah, you could have aimed for like a 1 to 30 on this. I mean, you could have aimed a lot higher to just continue. These zones completely change trend. They will change trends, they will continue trend because they are filling in every requirement that the markets need in order to commit in that direction. That's something I say a lot as well. That is why the strategy is so insanely strong. And boom, that is a 1 to 30 hit in 23 candles. So that was my best trade of the week for sure. The 30-minute allows for some great risk rewards, and I've never really just done a single trade analysis on this channel. I always go through a bunch at a time, but I think it's good to go in depth on one trade so you can see a bunch of the things that I'm looking for and how I analyze a trade that is maybe not in trend to most people. But yeah, like you saw, I did send that to the Discord before it happened. It said exactly my entry and everything, so if you do want to join there, market conditions are great for it right now, so feel free to join up that. If not, I got plenty of free information on the YouTube, so you don't have to. But that'll be the end of this one. Hope you got some value from this. Subscribe, like if you want, and I'll see you on the next one. Peace.